Let me turn to commercial real estate. I've been watching developing challenges in this sector for well over a year, and I think, unfortunately, much of the adverse impact remains ahead of us. The loss of occupancy, the loss of operating cash flow, and the resulting loss of property value is colliding with loan maturities in banks and securities. Much restructuring is required. Commercial real estate is a general concern because of its potential spillover effects to the broad economy for at least the medium term. I've spoken in earlier talks about the linkage of commercial real estate losses to the banking system, particularly small and medium-sized or regional banks, and therefore credit flows to businesses and consumers. We know it's going to be bad for the parties concerned. The question is, how bad will the spillover effects be? So let me try to summarize the current situation in commercial real estate. While delinquencies and loan losses on commercial mortgages are expected to continue to rise, there is evidence some property markets are stabilizing. Investment demand for certain property types appears to be increasing. Commercial mortgage origination steadily increased in 2009, and property sales increased toward the end of the year. There are indications that private capital is returning to commercial real estate markets. Even with the recent evidence of improvement, prices are down more than 40% from their peak. The decline in prices creates significant challenges for borrowers and lenders trying to refinance $1.4 trillion in loans that are expected to come due over the next 4 years, half of which are currently underwater. These problem loans will greatly strain banks whose balance sheets are heavily concentrated in commercial real estate, and the Federal Deposit Insurance Corporation, the FDIC, expects the result to be more bank failures this year than last. Smaller banks will have the toughest time because of their greater relative exposure to commercial real estate. The loan portfolios of small banks, those with less than $10 billion in assets, have 3 times the exposure relative to their capital base compared with that of larger institutions with more than $50 billion in assets. So to return to the spillover question, notwithstanding all these facts, my view today is commercial real estate will be a drag on the economy but won't torpedo the recovery. In the context of the whole national economy, the problem is manageable. It will be managed. I'm encouraged that so far the stakeholders, borrowers, banks, and creditor groups, along with new investors, are working the problem and executing on restructuring solutions.